Hello, everyone, and welcome to another edition of the AI Cash Grain podcast. Today is June 28th. I'm Satish Nandapurkar, Director of Data-Driven Strategies at Quantum Hedging. Wow, another down week for both corn and beans. Corn was down 32 cents for the week. Half that came on Friday, just with a shocking crop report on Friday with the increase in acres for corn. Beans was down 16 cents to 11.04. I'm going to turn it over to Cy in a minute here, and he's going to talk a bit about that crop report and what he thought about it and what he sees going forward from the trader's viewpoint. Then Cy will turn it over to Kevin, and Kevin will go over the models. Even with this drop to 420, our models still have a bearish stance on corn. They're looking at a 75% chance of going lower by the end of July, 75% chance of being lower by the end of September. So kind of a bearish stance there. But with beans, here down at 11.04, beans are kind of 50-50 to both July and to September. And then I'll come back and talk about the recommendations. With respect to the recommendations, it's an end of month. We were 45% sold. We were oversold relative to our benchmark. Our benchmark was only 30% sold. Here at the end of the month, the benchmark will sell 10%. Our rec is only to sell 5%. So we're going to narrow and get closer to the benchmark. Benchmark's going to be 40% sold. We're going to be 50% sold after this week. So the recommendation is to sell 5% on Monday morning open. On beans, same thing. The rec is to sell 5%. The benchmark's going to sell 10. We were a little bit oversold. We're going to match the benchmark coming out of this weekend. So the recommendation there is also to sell 5% on the Monday morning open. I'll come back and explain that more. Let me turn it over to Cy. Cy, what'd you think of this acre report? And a little bit shocking, yeah?
Thanks, Satish. The crop report today on Friday, June 28th, really shocked the market and added 1.5 million acres to corn, dropped the beans down 400,000. So I think the market was caught off guard there, specifically with corn. Now we're all sitting there going, oh my goodness, if we have a 2.5 carryout, what's the low end on a scatter chart for D's corn? And you kind of say, oh, that's about 350, maybe during harvest lows. So 420, 430 corn seems high given the data we had today, and given the forward look, the outlook on weather, right? Like Kevin keeps sending out our proprietary weather stuff, and if you look forward, it's kind of cold and wet still, just cold-ish, not as hot as it was. So start with corn, 430 corn, or pardon me, 350 corn kind of seems like the low end, and 430 seems like the high end for the next 30, 60 days, unless proven otherwise. Now, you do got a big short, so you can get these short covering rallies, but it feels like it's just going to be a slow death lower. The bean market was a little different. I get it. You were kind of down on the acres, but the big thing for me is if weather really looks good, the beans are going to follow corn lower. Sure, the beans will go down kicking and screaming, but it just doesn't feel like there's anything special here unless China comes back and steps in and starts a buying program, which is doable, but not yet. We're still trading U.S. weather, kind of a neutral at face, neutral, maybe a little bullish on beans, but it's just all relative, right? Better weather, corn goes down, wheat can't really find a bounce because the S&Ds were larger for wheat as well, probably growing. Beans will just be this kind of the slow leaker now. It feels like 30, 60 days. I'm curious, Kevin, what are you seeing in our models? We still kind of bearish, or what's the deal?
Hey, thanks, Cy. June has not been a friendly month for corn and bean prices, that's for sure. And, I guess the good news is if you've been following along, our AI models have been really suggesting we were going to see lower prices. And that's really getting confirmed here as we turn the calendar into July. Corn closing at 421 after Friday's debacle. There just wasn't anything in the USDA report, whether it was acres or stocks, to grab any sort of momentum onto the upside. So, our end of June price hits 420. Back at the start of June, D's corn was 470, and our QH model was pretty bearish at that time, and that has been confirmed. So, our AI model has been doing its job. Unfortunately, telling us that the best options right now or in the past have been selling at higher prices than what we're seeing today. So hopefully, that's what you've been doing on your own personal farm. Our range of expectations today is really lower, now down into the 350 mark with a high of 460. Again, that's kind of an expected range based on fundamentals we see today. So all the various features that go into our model, we have over 350 features that are driving our corn model. And, that's kind of where the barometer is right now. In terms of kind of price objectives, the next month, again, looking for kind of some more downside risk here to 403. And beyond that, there's not a ton of movement one way or the other in the model. That may change as new things come to light. Weather is really benign right now. There's just nothing on the weather front. Our weather data does feed into our models, but everything about the weather has been pretty favorable. I know there's some problem spots like on the East Coast. North Carolina's got problems, but we're talking about fringe areas that don't really add up to much in terms of significant losses. So overall, the crop is looking really good, and that's hard for our model to deviate from kind of a bearish story right now. For beans, I guess the good news is we've plummeted 80 cents this month. Our model is suggesting flat to slightly higher. Again, nothing here really suggesting a big upward move. Friday's report, again, not favorable, really. I mean, it did cut bean acres a little bit more than expected, but we still have a big carryout number. And, we really need to see, as Cy has mentioned, we really need to see some export programs pick up. And so, the demand side of our balance sheet needs to start showing some life here, probably before we can start to see anything substantial happen on our price outlook. In terms of price objectives, not much to really kind of trade on here. If you're looking to get super short or get super long, everything's pretty neutral right now. We've had this big 80-cent move, and our model did predict that. So, it's really hard for us to kind of say our model is grabbing onto anything that gives us strong directional indicators any way, either up or down right now. So that's kind of where we're at. We feel grateful that our model has been kind of showing us this trajectory, and unfortunately, the reality is we're now in it. And we're going to wait and see what our model does probably before we start to take more actions. Or Satish, I'll turn it over to you to talk about strategies.
Thanks, Kevin. Again, before I go to the recommendations, I want to just go through what our goal is one more time with the recommendations we give, because we are bearish in corn, and you're going to see us not a recommendation that is probably less than you would expect. We're neutral in beans. The recommendation in beans will probably make sense to sell 5%, but the recommendation in corn is also just to sell 5%. It's going to seem a little strange relative to the fact that we are bearish. We believe corn prices will go down with about a 75% probability. However, our strategy and our approach is completely data-driven, and the goal of our entire process, the AI cash grain process, is to beat the benchmark. The benchmark is this typical producer cash sale index, which sells a predetermined percentage of expected bushels each month end of the close from January through October, those 10 months, right? So we sold 5% at the end of the month from January through April. We stepped it up to 10 in May, stepped it up to 10 in June. Here at the end of June, the index is going to be 40% sold for both corn and beans. So when we're evaluating a strategy, how much should we sell right now? We're pumping our forecast in. We're saying, yes, we're bearish in corn, we're neutral in beans, but where are we currently relative to the benchmark? And our goal is to beat that benchmark by a meaningful amount, by 8 to 12 cents in corn, maybe 10 to 15 cents in beans, to beat it, but with a high probability. So we're always balancing risk and reward. And remember, our forecasts aren't exact, they're probabilistic, and they have a confidence interval around them. So based on the probabilities around that forecast and around the ranges, the simulation is taking those forecasts and saying, what do I do right now to give me the best probability of beating my benchmark by the amount that I want to beat the benchmark with? So it may actually be a little conservative, and that's what's happening with corn here. So let me just go to the corn recommendation. So where we stand is we had a bearish stance in corn. We were 45% sold coming into this weekend. The index was only 30% sold. There was a month end. The index on the month end sells 10% like clockwork. So now the benchmark is 40% sold. The benchmark was at about a 470 average price when it was 30% sold, but we're so much lower. It's now at a 458 average price. It's 40% sold. We're already 45% sold with an average price of 470.72. So the simulation is saying sell 5%. You don't need to sell 10, 15 or more, even though we're bearish, because we're so far ahead of the game. When we sell that 5%, we'll be around the 465 average price, depending on where we open on Monday. If we open around where we close, we'll be a little bit better than 465. So we're already going to be about 7 cents ahead of the benchmark. And that's why it's kind of being a little conservative on the sell, because even though we are bearish, 75% chance going down, there's a 25% chance we might go up. We've just dropped a lot. Something could surprise and we could head back up. So the recommendation is a little conservative here and will still be oversold. So coming out of this recommendation, which is to sell 5% on the Monday open, we'll be 50% sold. That's where our recommendation will be. The benchmark we're against will still only be 40% sold. Okay. Now with beans, different story. The models are neutral. We had a slightly bearish stance coming in. We were just 35% sold. The benchmark was at 30% sold coming into the weekend. Month end, benchmark will get 10% more sold here on the month end. So it'll now be 40% sold. We're only 35% sold. However, our average price was 11.78. The benchmark was 11.74, but now it's going to sell at a much lower level. This additional 10% coming out, it'll be 11.56. We, coming into the weekend, we're at 11.78. We're going to sell 5%. After we sell 5%, we will match the benchmark. We'll be 40% sold. The benchmark will be 40% sold. If the Monday open is about the same as where the Friday close was, our average will be 11.68-ish, probably a little bit better than 11.68. The benchmark is going to be down around 11.57. So we'll be 11 cents ahead of that benchmark. And again, that's why the model is looking at not just the forecast, but how do I manage my risk reward to beat my benchmark index, by a meaningful amount with the highest probability. And that's why you're getting these sale recommendations. 5% sale on the Monday open for corn, 5% sale on the Monday open for beans. So just to do a little summary and recap, corn was had a bad week, especially on Friday with the crop reports. I talked about just how bearish the crop report was with the additional acres. Beans also had a bearish week, but not a Friday. The crop report was neutral, but there's still weather concerns. If we have good weather, beans could follow everything else lower with that good weather. Kevin then talked about the models. Still bearish for corn, 75% chance that we might go lower for July and 75% chance by September. So definitely the models are forecasting even lower than where we're at. For beans, it's 50-50. It's kind of a neutral situation. It could go either way at this point is what the models are saying. And then we do have recommendations. Again, the recommendations are for corn. We were 45% sold. The rec this week is to sell 5% on the Monday open to get to a total of 50% sold. For beans, we were 35% sold. The recommendation this week is also to sell 5% to get to 40% this week. Thanks again for joining us here on the AI Cash Grain podcast. Thanks for listening in, and thanks for being a subscriber. I'm Satish Nandapurkar, and we will see you again next week. It's getting interesting as we get into the summer. Thank you.